All right. All right. Hey, everybody. Welcome. Good morning, afternoon, evening, wherever you guys are across the map. So glad you could be joining us. We were just kind of giving some people some time to join in. Looks like we have a great turnout today. Wow, people still rolling in. So great to see. So happy to be back with one of these webinars where we'll be chatting with you guys. So let's get started. My name is Ryan Broussard. I am the VP of Production Incentives, which we'll be talking about today at Media Services Payroll. And today we will be talking about tagging incentive cost for your budget, which I'm sure with everything going on right now, people have been looking at budgets on their screen and their eyes are starting to bleed. But maybe we can show you guys some new stuff and some tools and some really cool things that can help you as you move forward with your budgets in the future. So with that said, I'd love to introduce my co-host today, Steve Bizanoff, who is the VP of Sales at Media Services Payroll and the expert in all things payroll and budgeting, which he's been showing me some stuff with this, with budgeting and some of the things he's going to show us today, and it's really, really cool. So I'm happy to have you, Steve, and thanks for letting me be here.
Oh, it's a pleasure to be able to work with our tax incentive specialist and expert on the webinar. So do a lot of these webinars.
Yeah, no, it's going to be. I think it's going to be a fun day today. I hope people are ready to get a good education on this stuff and kind of see some new things. So with that said, I will say that there's a question section on everybody's screen in the chat window. If you have any questions throughout this, do not hesitate to just send them on. We'll get to them if we can. Whether it be at the end or during the presentation, and then if we don't get them, we will address those after the fact, because we do get a readout of everything and all the questions, so we're able to hit your questions later. So feel free to do that, and and this is being recorded. So if anybody's coming on late, I see quite a few people still rolling in, and I'm sure people will roll in. This is being recorded. So with that said, let's get moving. Let's start moving forward. All right, what tagging your budget for incentives is, and kind of what we're talking about today. You're going to be hearing terms like tagging and flagging a lot today. That's really what we're showing you. And we always get the question, is there a difference between tagging and flagging? And there really isn't. It's just a terminology. So you might hear me flip back and forth with it. And call it, don't get confused. It's all kind of the same thing. So we're basically just putting an ID basically on a line item or something particular in a budget. Why would I ever want to do this? Who needs this? Few reasons why. A, for incentive purposes, which is what we're talking about today, for tracking your incentive, showing it to possibly the bank, the financiers that you're working with for your incentive. If you're trying to get your movie made, you want to say, hey, I'm going to get X amount of dollars back. So that would be a prime reason to flag and tag. There we go. Already flag and tag your budget for the incentive. And then also a lot of these states that do the incentives, they usually want to see a tagged budget on the front end when you submit your application. So that makes it extremely important as well. Is tagging only for incentives? Well, today we'll be talking about that for the most part. But Steve, I mean, tagging is used for a variety of things, right?
Right. In Showbiz Budgeting, using the term tagging, using the subgroups function, and obviously we're talking about tax incentives, but it can be used for many different things. You can create subgroups for locations. If you want to track taxes, if you want to track individual costs. So anything that you want to isolate, and you really can create a subgroup for any purpose and then run reports or totals on.
Yeah, and I actually just got a great comment from somebody listening. And once again, do not hesitate for everybody listening to chime in. And they said, remember, a lot of these people here may not be using the program we're using today. So try to speak in generic terms of what can help everybody. And that's a great point and something we will be adamant about. So Steve mentioned subgroups, and, we'll kind of show you guys what the equivalent is with competitors and Movie Magic and, the other programs out there. So sit tight for that. We're not excluding anybody. This is a universal education today. So bear with us. How can budgeting software help? Well, that's what we're about to see. So the actual software itself can tag these things, allocate out the credit, have little specifics here and there that can make it easier when doing all these things we're talking about. So we're going to dive right into that right now, with showing Showbiz Budgeting. And Steve, Showbiz Budgeting, this is a different budgeting program than what some people may have, but this one is free for our payroll clients, correct?
That is correct. If you're using our services, you get it at no charge. So,
Right.
all right.
Right. And is there like a limit on licenses or anything? And what would be the cost if they're not a payroll client?
If they're not a payroll client, the cost of the software is $399 for the base license, which has 2 installs, but you can go as high as you need from there and add additional users. We have on the high end large clients who have hundreds of users, so all depends on, and you can get one up to as many as you need.
Great. And once again, this is not, we're not just talking about Showbiz Budgeting. We're going to be talking about universal terms and tagging and incentives today. So let's jump right into it, Steve. What would be the first thing we'd do?
All right, so to start a budget in general, obviously we're looking at creating a budget to track tax incentives. So I'm going to go into my templates. And Showbiz Budgeting comes with, at this point, over 70 different templates, and we're continuously adding. For example, like I'm working on an Australian tax incentive template right now. But you'll see here I have the Georgia tax credit budget. That is based on the tax incentive requirements that Georgia requires for their tax incentive. So I can open it up and you'll see the categories that are required for the Georgia tax incentive, and it comes with all the categories, and then we can go straight into subgroups since that's what we started talking about.
Mm-hmm.
And these are the flags. And
yeah, I mean that's a good place to jump in if you don't mind. So just so everybody's clear, he opened up the template, and what this template does, and Steve, correct me if I'm wrong, this is a chart of accounts that is familiar to the state of Georgia, for example, which Steve built this off of. And if anybody has any suggestions for other states we should have in there, Steve, how many do you have in there? You mentioned Australia, you've got Georgia, any more?
New York is in there already, and that's all the standard ones that we have. And we're actually been requesting more from other states so we can add, but many of them are similar. So Georgia's a good
that's true.
basis, but
that's true.
Yeah, have any others that you want added, or that maybe a studio or a network require, you can share it with us, and we'll be glad to put it in.
Terrific. Yeah, somebody mentioned a Canadian incentive template would be great to see, and that would be an interesting one too. There's a federal. We'd have to build the federal in there and the locals, which is possible, but that's something we can talk about later on. So the suggestions are rolling in. I love seeing them. Oregon, Louisiana. We're going to be talking about one of those today. So let's move forward. So Steve did open that template. Now, that is not going to bring in any specific incentives, percentages for these incentives, just so everybody knows. It's not going to do all the work for you, but it's going to set up the chart of accounts, which is this top sheet that you see behind the window at Steve, and he'll show us a second. And it'll also have some preloaded subgroups. And subgroups, that's the equivalent of like groups, right? So people might be used to just calling that groups, right? Steve, that's what subgroups are?
Exactly. So, the other program out there uses the term groups, and it's the same function.
Gotcha. And subgroups can be used for a variety of things, right, Steve, not just incentives?
Yeah. There's many functionalities that can be used to track different things. Obviously, we're focusing on subgroups, but many different ways to use things. And we do seminars that talk about the program in general. We go over that there.
Gotcha. So let's reopen. I'm sorry I made you close that. Let's reopen those subgroups. So these were pre-populated in these. Now, with these subgroups and these tags, we mentioned that the state wants to see it when you're showing it to financiers and things like that. They want to see it, but that doesn't mean that you have to use specific tags. Some states have recommendations. I actually just heard recently Georgia wants this NQGL for things that are non-qualifying in the state. But not every state has a required list. They usually have like an audit suggestion or something like that. So today, since we're talking about Georgia and their incentive, at least for some of the time, we'll be talking about some other stuff soon. Their incentive is pretty cut and dry. It's 30% on whatever is incurred in the state, whether they're resident or non-resident, wages in the state, and anything you buy in the state is 30%. So you see in these preloaded ones that Steve has, I see qualified labor, qualified spend, and Q for non-qualifying. For today's purposes of just simply showing this at the beginning, we will get a little more complicated soon, so everybody sit tight. You're going to see some cool stuff. We're just going to use QS for qualifying spend, since once again, everything in Georgia, as long as it happens in Georgia, except for a few things like wrapped gifts and losses and damages and a few other things, will qualify for the 30%. So we're just going to use that flag. So Steve, do you want to just show us real quick how you set up one of these groups? It's fairly quick, right?
So it's real easy. I'm just going to hit the plus key right here, and I'm just going to type in demo as a flag since we have QS already.
Okay.
And then you type in demo and whatever you want to describe it, and then click OK, and it's there. So it's ready to be used. It's that. So you can come up with any type of subgroups or flags that you want and just plug them right in. Now they're ready for use as I start my budget.
Great. And so everybody knows, there are any questions about setting up subgroups or groups or what they are. So all he's doing is creating a group, a pot that he's going to put certain items in. So if you know this will be, you're going to be utilizing this in Georgia, then you'd want to tag that as qualified spend. So let's actually kind of see, let's see that, if you don't mind, Steve, where we actually are going to tag something using one of these subgroups. Somebody just asked, is it the same as groups? Yes, we did touch on that. So once again, I know some of the terminology with different softwares might be different. Subgroups and groups are the same thing. So do not fret about that.
All right, so I'm going to go into the other budget, which has items that I can utilize to flag for subgroups.
Okay. Yeah, I mean, let's be honest, everybody. We keep it pretty real on these webinars. So I mean, this is a preloaded. we talked about the cake, right? Like with a cooking show, how you have the batter and then the chef goes and puts it in the oven and then takes out the final cake 2 seconds later. So don't hate on us for having a preloaded budget behind our template. We might do that one more time as well. So just a little heads up with that, what you're looking at. But this is one that Steve obviously has flushed out with wages and real numbers and trying to take some real dummy examples. This is just dummy numbers. So don't worry when you're looking at your budget if you see there's no numbers. These are just ones he's put in so that he can show you how he would tag it using a subgroup.
Right, exactly. So now I'll go into any category, and up here we see the budget level and the different accounts, and right below it we see the detail. So if I'm on, right now I'm on 3301 customer designer, and here are all the detail items related to this budget. These are here already. Obviously I didn't want to bore you watching me key them. And over here are all the subgroups. So these items are all flagged. So I can highlight them. You see I have them set as qualified spend already. I can go in and let's say I want to quickly change them to non-qualified. I can change them to non-qualified. And I'm going to put them back because I want to leave them as qualified. And I obviously I could go one by one, but I'm just showing you the quick way to do it. Account by account, and so that's how easy it is to go in and apply your coding to your transactions with the subgroup. So this way I can go ahead after and set up my tax incentive calculation so it knows what's qualified spend, and it will calculate my savings, and we'll go over that shortly.
No, this is really cool to see. And when Steve first showed me this, I really liked it, just because from an incentive perspective, when you are doing your budgets and what we're used to, you usually have to, in some other programs, you might have to drill down and move to another tab or another page in order to see this detail. But I really like that it's split up like this, especially for incentive purposes, so that I can see, let's say the prep was done out of state. As you just saw, Steve could quickly change that to NQ and see all the breakdown of that. So really cool to see that. Does anybody have any? I know look, we have a lot of stuff to cover today, and we don't want to bore you with, as Steve mentioned, retagging things over and over again, because we are aware that sometimes with budgeting there's a bunch of redundancy. But does anybody have any questions about this? Somebody said, can you click more than one group for a single entry? So
yeah, you mean
yeah,
more than one subgroup, I assume they mean.
yeah.
So if you like for a local tax, and so like here you have qualified spend, and let's say for argument's sake, we're talking Georgia.
Savannah, you got Savannah there, perfect.
Yeah, so I can click on that and apply both of them. So this way, it's now the qualified spend and Savannah is applied to that that transaction. And actually, if I want to do the whole group, make it real easy, and then just click Savannah and qualified spend, and this way it will apply them to all of them real quick. So it makes it easy. As many programs that you're going for, you can apply as many codes as you need.
Mm-hmm. Yeah, and somebody just asked about the fringes, because obviously you have a fringe line there. Now, you can see how easy he tagged it, but we will talk about, because they're asking about some non-qualifying fringes. We're going to show you that in just a second with the next cool screen. So if anybody has any other questions about, tagging things for, once again, we're talking very simplistic, language right here for Georgia. It's a great example for that with qualifying versus non-qualifying, but you can make it more detailed with qualifying labor and non-resident labor, however you'd want to do it, which you're about to see in the next state we're going to do. But for the sake of Georgia, everything qualifies for 30. So we've got it just grouped as qualified spend. Are subgroups the tags, somebody asked? Essentially, yes, right, Steve? I mean, you're setting up the tags in your subgroup window.
Correct. Yeah, all you're doing is going up here and setting them all up. As you see, I have a ton that we're not using. I have a library of things in different budgets, so you can really create whatever you need.
Very cool. Very cool. Yeah, I really like that. Steve did show me this program because, I've used competitors as well. I've seen what other softwares are out there. And, these are just, some of the advantages of this type of program. But as a whole, tagging and flagging is going to be something you're going to be using universally. So going back to that first initial question, this would be something that you'll be using in any budget.
Yeah, and while we're looking, there's another nice option on the subgroup is the Where Used button. You can click on qualified spend and hit the button, and you can see everything that's been applied. So it's a quick place to review and see where I've utilized the qualified spend code.
Yeah, that I really like too, because we're about to see when we bring all the credits together for what we call the applied credit window, which Steve is about to show us. But to see that on the subgroup window, that's really cool too. Really, really cool. Any other questions with regards to tagging, the subgroup window, anything that we've looked at so far before we get into actually putting some meaning behind these tags, putting a percent to it and actually making it count towards the incentives? Anybody have any questions so far? Great. Some people are just saying they like what they see so far, and I like to hear that. So let's, you're about to go to the summary tab, it looks like, Steve. What the equivalent of that in some other programs, just so everybody can keep up, that would be what, the top sheet?
Top sheet is another term that's used on other programs.
Gotcha.
So here we're on the top sheet, and we actually have this is a starter, and what we've done here is we have the grand total and the net total. So what we want to do is add the applied credit, which is where we calculate the tax incentive. So what I'm going to do here is go into edit and insert, and I'm going to create a tax incentive calculation using the applied credit, and I'm going to use a little graphic so I know this is Georgia, a little peach, which is pretty common. And
I like that. That's kind of different. That's fun. We got to make it fun, right, everybody? If anybody has any suggestions of what we could use for Georgia, go ahead and send them on, because I'll go with the peach, though, because, it's actually a requirement, talking about the incentive, is to do that peach logo at the end, which I'm sure a lot of people that's worked in Georgia, and I see a few people on here I know have, to get that 10%, to get your full 30, you need to have that peach logo. So that's just, it's natural to use that peach. So while Steve is putting in this information for this applied credit, I want to state once again that Georgia is a transferable credit. It's 30% on what's spent in the state. Okay. Transferable means that we have to sell it on the open market in order to turn the credit into cash. You get a credit, you probably won't be able to use it, and you have to turn it into cash. And if you want some more information about the incentives, we've done incentive webinars in the past. Please check those out. That's always a great place to start.
all right. So
Steve,
now,
what are you doing? You're just bringing in a subgroup?
I'm going to apply the subgroup. The subgroup that we want to apply is the qualified spend, as you had said earlier. So I'm just going to click on that. If we had multiple, we could select, and we'll look at a different scenario later. We didn't talk about phases yet, but phase is...
We're about to.
Yeah, we're about to. Basically, the different columns. And so what we have here is a Georgia phase, and I'm going to apply the tax credit against the Georgia phase.
And so everybody knows what he's looking at right now with regards to the tax credit. He's bringing in that group that we set up and everything that he's tagged with that group. So all the line items that he's tagged with the group throughout the budget. Now he's bringing that everything that was tagged with that, he's bringing it into this credit. And it asks for cap type. That would be if there's any like compensation caps, things like that. Georgia does have one. It's a $500,000 compensation cap, but it doesn't apply to loan outs, and it's not going to affect this budget. So we're going to put none. And the percent, as we talked about, is 30, assuming that you're meeting all the minimum required criteria in Georgia. Somebody asked about fringes, and we'll see this a little later, but you'll see he could check off an excluded fringe right here, and it wouldn't apply it against the 30%. And we're going to show that actually in just a few steps. So, but for Georgia, the fringes qualify, so he can move forward with it.
All right. And the only other thing, do we have to,
the credit cap? Yeah, so that's another good thing. So a credit cap would be if a program had a cap where they said you only get X amount of dollars back no matter what you're spending in the state. Georgia doesn't have that, which is why they're so popular. The discount goes to what we're talking about with the transferability of the credit. In order to you have to turn your credit into cash. What are you going to do with the credit? If you're an independent, you're working there and you're not based in Georgia, so you have to sell it. And it does range with a window of, supply and demand of the credits. If they're super busy, it's harder to sell because there's an influx of credits. So I've seen it as low as 75 cents on the dollar and as high as 95. So for the sake of being conservative, let's assume that we'll get 90 and maybe we'll put like a 3-cent buffer in there. So like 87. And I know I'm going to get a slew of people saying, that's too low. I know I can get higher. Well, you know what? I would rather always be lower than higher when it comes to this, so that it looks good when you're showing it to your financiers or whoever. And you can, you don't want to come in, and say you didn't get as much as you thought you were going to get. So it looks like you've tagged everything, Steve. Oh, and I noticed it says CR production incentives map right there. And that should link to our website, right?
Correct. So I can just click on that, and it goes over to the website. And let's say for Georgia, I can highlight it and gives the information that you have put on our website.
Right. Perfect. And this, so everybody knows, I update this periodically. I'm the one updating this, and this information, is updated. You can always come to me directly for this information when you're doing your budget, or you can go here as a great resource for terminology of the incentives, transferable, non-refundable, all that type of stuff. And then, of course, the information about the state. So that's just a good thing to have built into the credit window. I love that that's there.
Okay. All right.
Got a few questions, Steve, coming in while we're here. How did you get to that subgroup total again? We'll show it to you real quick. We'll show it to you quickly. We'll get to that. I'm sorry. Does the icon of the peach travel through the entire system and we see it in different places? That's a great question, Steve, and I know the answer, but I'm gonna let you show it.
Okay. All right. So now just see that on the different transactions that we've applied the credit qualified spend, and you see the peach does flow through anywhere that we've applied it to. So you go through any of the
Very
detail
cool.
and you just jump between accounts and you see it's throughout. Okay.
Very, very cool. And you could, and you know, just so you guys know, it's retroactive too. So if Steve right now, not that he has to show it, but just so you know, if he needed to change, you know, something on this detail to non-qualifying, it would then in effect apply the applied credit that he already set up. So it's live. It's constantly talking to itself with the credit. It's not like you have to constantly redo the credit. You would only need to do that if you were adding a new subgroup to the credit, or if you were changing the percentage of the credit. So, with that said, let's look back at that summary in that top sheet, Steve, because it's such a great page just for people to just kind of see what we're dealing with and what we're looking at.
Right.
So this is probably familiar to a lot of people, what they're looking at with their top sheet, or what we call the summary, and you can see that tax credit down there. And that's the net credit too, which Steve showed us earlier because he applied that 13% discount for the transferability. And somebody just asked, is that what it means when people say they need a broker for the credit? It is exactly what it means, is because you need a broker to try to help sell that credit, right, on the open market. And so there's going to be a discount of some kind, and that line is taking into effect that discount. So that gives you a total, that net total that Steve mentioned earlier. You can see that now, and you can kind of show your financiers, and the state's going to want to see that, and your producers, just so they kind of know what's getting back and what the overall cost of this project's going to take. So that would be as simple as possible, an incentive tagging, but don't everybody jump off yet. We're not done. There's some interesting stuff coming up. Let's say one of the producers said, look, Georgia is great. I love Georgia, but I'm starting to think it might be more cost effective if I go to Louisiana or another state or whatever. So normally, and I just spoke with one of my friends and a producer and accountant last week, and she was telling me she has 8 budgets open for incentives because they're trying to figure out where to go and how to do it. And here, you don't really have to do that, is my understanding. Steve mentioned phases, and he's about to show it to us. And so let's say, Steve, we're going to do a Louisiana. We want to see a Louisiana comparison to this Georgia. So what would be the next step?
All right. So basically, a phase is in essence an additional column. So instead of going out to a new file, I can put as many phases as I want into this budget. And when I say as many, the program can only do up to 500. So you really
only. Mm-hmm.
And honestly, you really don't see people going that high. I've seen up to 25, 30 at a time, but it makes it easier. So let's say I want to create a comparison budget for Louisiana. I can go into my phases. And I actually have another one already in here, but I'm going to create a new one and just go to add. And I'm just going to call it LA just so we have it. Since duplicate, I could change any color. Also beware if you're going out of the country, I don't have any currencies in this demo, but you could do up to 10 currencies at a time. So if you need to work internationally, the program can take care of that. And I want to tell
you. Yeah, somebody mentioned Canada earlier, so that would be a great example of when you would use,
US dollars, Canadian dollars, all that's doable in the program. And then I can have it automatically copy all the data from the Georgia budget over. And obviously I'll have to massage it because certain things are different, like payroll fringes and different coding, but makes it a lot faster. So do is click, and now I have that there. And you see it's exactly the same since it carried it over, but now I can go ahead and start making modifications to that.
Yeah, and I mean that's really where it would, your education on the incentive would come into play. So he just copied over the budget, and it looks like, Steve, he copied over all the details, all the detail lines, everything, but there's just certain things, depending on what state you go to, where they're going to differ from what qualifies. For example, in Louisiana, your airfare doesn't qualify. So that would be something you'd want to dip into travel. You'd want to go there and you'd want to create, a different tag for that. Speaking of which, because we'd probably want to set up a new subgroup for all the Louisiana stuff with different tags. The reason I would want to do that is because I've had suggestions from Louisiana auditors of what to tag with. But B, if it looks like it's a universal subgroup window, and I promised somebody we'd go back to that subgroup window, Steve, so maybe we can just look at that real quick so people can see the totals. That total, we got that question about the subgroup totals, that's under the subgroup window. So it's showing that's where you set it up and you can see your totals. And you'll see that we made some new flags already. We made, Louisiana, L for resident labor, P for purchases, N for non-resident. And the reason we're doing that, and it's more important with Louisiana, is they have different percentages for things. So you get 40% on resident labor, you get 25 on resident purchases, you get 25 on non-resident labor working in the state. So we need flags for each of those things to group them together, especially because they have different percentages. That is key. That is key to this whole, everything we're showing you guys today with the incentives, that is key. It's grouping them together based off what you know, based off the people working on the show, so that we can estimate what you would get back from your credits. So with that said, is there any other questions? Because what we're going to do is I think we're going to open up another budget that just has more numbers put into it, that's already built in, but it's got those tags we talked about. So it's already got all the Georgia ones put in there that we already did. And it's got the Louisiana tags that I just mentioned, an L for resident, a P for purchases, N for non-resident, and then we actually did an X for non-qualifying. As you can see right there in what Steve just showed us. But airfare is a great comparison because it doesn't qualify. Another great comparison in Louisiana, and what's going to show a lot of differences between phase to phase and comparison, is sales tax. Sales tax does not qualify in Louisiana. That's extremely unique, and that can be with my pretend line producer that said, "Hey, go to Louisiana. It's going to be cheaper." Well, we want to make sure that it is. So we have to accumulate that sales tax doesn't qualify. So we're going to want to go into that budget we copied and make those changes. And it goes both ways. So we're not biased to one state or another. This is all dummy material. This is not a real thing. So I've already got people saying, Louisiana would be better, Georgia would be better. This is all mocked up. So I love the back and forth of that, and I'm having fun with it by watching people's comments. But the truth of the matter is this is just dummy material to show you guys what the program can do and what being educated on this stuff means when you're doing a budget. So, Steve, maybe we should go in and actually just kind of show how we would break out sales tax in the Louisiana phase, because that's going to make a difference when comparing a budget to a state like Louisiana. And look, this goes for anything. Some states you're going to compare in the phases, they won't have, their non-resident won't qualify. So that's going to be a big determining difference. And every state's unique. And that's why that map that Steve showed you is important, and reaching out to me is important. And let's not forget the payroll fringes. The payroll fringes, when he copies everything over, the SUTA, the workers' comp, that's going to change too. And setting up fringes is pretty easy, right, Steve? I mean, it's pretty standard with all programs, how to set up fringes.
You see, I have a whole library of codes already pre-done, so you would just need to apply them. And obviously, before you start budgeting, you want to make sure the rates are accurate, and we can provide all the up-to-date rates whenever you do a budget.
Gotcha. Yeah, see, that's great. So, I mean, that would be something we'd want to change from state to state too. And that's going to be really important when we do the Louisiana applied credit. So I guess let's go through and take out that sales tax on something, just because that's going to be an example. Well, we've done it. I mean, we're not lying. Once again, we play it real over here. We've already done it. Steve's done it. We talked about it, but we're going to kind of replicate it so you guys can see. Now, I've seen this done a multitude of ways. I've had people say they do it this way or that way with breaking out sales tax. Steve, why don't you explain real quick how you broke this one out for this line?
Yeah, so what we did basically is first we've set up a global, and the global.
And what is a global? I mean, global's pretty universal in every system, right? So what is a global?
Yeah, it's you hear it in most of the budgeting systems. It's basically a global command that you can define so it can be utilized throughout the system. So, for example, the global I created for sales tax in Louisiana is LAS, and basically what that code is equated to is the 9.45% sales tax in the state of Louisiana. And so now what we can do is just apply that accordingly in the transaction. So what we want to do is I've typed in LAS times 35,000, and that basically comes up to the sales tax amount for that rental and purchase. So
Great.
that's
So
how we
then
broke.
I think, so yeah, so we just made a separate line for sales tax, which is easy to do, right, Steve? You just do the add
Yeah, you just
line,
add.
and we just added,
Exactly.
and and then we just he just applied that global, and then it did the against that. Now we're assuming that 35,000 that you're looking on the screen, that's pre-tax, right? So we are assuming that. So sometimes I've seen people do it to where they use the full amount including tax, and then let the global kind of do the math for it. Then they go back in and minus it from the main line. But the key with this is that it's on two separate lines, and look at the subgroups on his left. So he's got the P and the X. So he knows the X is non-qualifying, and the P we set up in the subgroups originally as a Louisiana purchase that would qualify for the 25%. So that's really key when seeing this, and it's really going to show a difference when doing side-by-side comparisons. So let's see that. Let's see the side-by-side comparison in the phases and kind of what we're looking at. I guess that would be on what, the summary / top budget page.
Exactly. And here we have Georgia and Louisiana with the variance. And obviously we haven't done all the lines, but we have variance column with some lines, and it's calculating for us. So it's a nice little quick snapshot, both budgets with the variance, and at the bottom you have the total.
Now I think we do have to go to the Louisiana phase and create the applied credit. We forgot to do that. We can do that real quick. So we'll do that right now, because we're going to show people were asking about the fringes, and we already talked about Louisiana sales tax doesn't qualify. And that also trickles down into, because it's a state tax, trickles down into SUTA. So when we do the subgroup of I lost my train of thought. When we do the subgroup of
resident labor,
of the wages, we have to break out the SUTA. And I think this was one you were playing around with the alligator, which is super funny for the icon. But you can see he broke out the SUI here. Let's bring in a different group, Steve. Let's bring in the L group.
Okay. L is resident labor.
Yeah.
Okay.
And then make sure, see how he has the SUI selected right there? So that's pulling from the fringes he set up in the beginning. And so let's see how that looks when he applies. And it's 40%. We talked about L is for Louisiana residents. Let's see how that looks when he applies it against the wages. So you'll see it has the little excluding fringe there. So it's pulling out that SUI, okay? And then it's multiplying times 40, and it's giving you the total amount. And I know we kind of already had this set up, so we missed a few things with Louisiana. So let me backtrack a second. The credit cap, I've got a number in there, and it looks like a weird number. The reason is because Louisiana does have a credit cap. They do have a maximum that you'll get back, but it's, once again, very unique. It's either $20 million on everything, so if you're this giant, production, or it's 40% of what you spend in Louisiana. So sometimes what I'll do, and I think I was playing around with this, is I'll actually get a total from that gross. See that little gross column that Steve has right there with everything that he's tagging? And then I would take 40% of that, and then I'd put it in the credit cap. So that's one way of doing it. Some people just don't put it in at all because they don't think they'll hit the 40%. The discount we have there is 12, okay? But this is not a transferable credit. Louisiana is a partially refundable credit. And once again, these glossaries of these terms are all on that link to the website. But partially refundable means you can't sell it on the open market, but the state will give you back some of your money. And in Louisiana, the net is 88 cents on the dollar, which is why he's got that 12% discount on there. And once again, you'll see it's applying that. So you can see at the bottom, his credit amount is 148,000, but then it's applying that 12% to give him that 130,000. So yeah, that's yeah. So yeah, I think that would be it on that page. And then I think that the comparisons is really what's key, is looking at it side by side and seeing where you would take advantage of it. We obviously don't have. I think we could probably flag a few more things while questions are rolling in. Steve, maybe you could go back to the Louisiana credit and add in the P and the X, the P and the N, and that would kind of bring in some things. But overall, that's what we're looking at. We're looking at those direct comparisons to Georgia versus Louisiana to see what would be the most cost-effective thing. And sometimes, I was playing around with a budget in this last week. Sometimes, you think it is cheaper or more expensive to go to where you're going, but then you put in the tax credit and it doesn't. And that's exactly what this is going to show. So, that's really important to do when looking at these phases. So Steve's it looks like he's just kind of adding some of these things in and going through it. Is there any questions? I see a few questions right now. Let me go through some of these. We got a few. Let's see. I noticed the fringes are in a column that looks like they could be applied to just about anything if needed. Is that correct? Steve, can fringes be applied to anything?
Yeah, it's when you set up the budget, you actually can define categories to be able to use fringes or not. So yes, you can set it up to apply to anything if you want to.
Nice. Somebody suggested we use a crawfish instead of an alligator. I don't know if we have that. Do we have maybe there's a lobster in there. I guess there's a whole bunch of things. Everybody send over your suggestions of what you'd want to see for every state. Maybe we could do our best to get those in. Yeah. So, looking at that top sheet and that summary, that's really where phases come into play. And, that's really the key with using this program and being educated on these incentives, is seeing directly the comparison between two phases as opposed to juggling, budgets over and over again. So, if there's any other questions, I think, we can start taking questions and moving forward. I do want to see that summary page just one more time, Steve, if you don't mind, just because I want everybody to kind of get a look at it. Just so they can kind of see, obviously some of these numbers are the same, but the variances would carry over if you have some. And if you scrolled all the way to the bottom, I know we don't have a lot tagged in Louisiana because you guys saw what we were doing, but you will see a difference. You will see a difference, and in that very bottom, that kind of gives you the net versus each other. So you're going to want to use that to really showcase what's important and what you're showing your financiers and your brokers and things like that. So I guess let's take it to questions. Any questions about this? Let's see. Somebody saying that they've used the L and the P and the N before in Louisiana. Yeah, once again, the state they don't dictate which ones you have to use. And as far as I know, for any state, it's just a matter of what you choose to use. But if an auditor, an auditor has suggested to me to use these flags, then that's what we're going to use. So, but you can call it whatever you want. And that's really just up to you guys. And once again, for incentive advice or anything like that, you guys can reach out to me. I think we can pull up that do you have our contact information, Steve? We can pull that up, and you can reach out to myself. You can reach out to Steve, and if you need for the fringes, we mentioned the fringes earlier, and Steve would always be able to provide the payroll fringes and things like that. So, and then the incentives, you guys are between phases. If you're thinking, I get a lot of people say, look, I think I'm going to film this in California, but I really want to look at Georgia. And I say, because they say, oh, Georgia's the best. And don't get me wrong, it's great. But I always say, let's do the math. Let's actually do a comparison to see if it's better to film it in your backyard than it would be to move to Georgia, to move everything to Georgia and go. And a lot of times using those phases, you're surprised that, it didn't work the way you thought it would work. And that's what's so great about those comparisons. So some people were asking Steve about Excel and importing Excel into Showbiz Budgeting. What's the
there's really no way to import a budget from Excel. We can import from Movie Magic, but Excel is hard because you don't know the mapping of where things are. So no, there's no way you can copy and paste information, but it's really not efficient.
Yeah. It says right here, is comparing two different budgets similar to doing budget versus actual?
Well, in a way, it's you could show a variance, and that's actually one thing we didn't even mention. Showbiz Budgeting can do the actuals in the program. We even look at that, and you can, for tax incentives, you can flag and track your costs to create reports for the state that you're getting the incentive. So anybody's interested in actualization on here, we do a whole webinar which goes through all of that as well. So, and you're welcome to contact me with any questions on that.
Great. Can you export out to Excel from Showbiz Budgeting?
Yes, that actually, most reports can go to Excel. Commonly, people are exporting the cost report to Excel from Showbiz. The budget itself isn't a great solution. It will go there, but you really can't do it to manipulate your budget because the layout of Excel wouldn't really be perfect. But most reports can go to Excel, and actually everything can be PDF questions.
Great. Well, I think we did this one pretty quick and swifty. I know that sometimes when you're looking at the budgets and we're going over this stuff, it can get so tiresome. So we're not looking to do some 2-hour seminar here, and I hope you guys do appreciate that. But if you want to see more of this, please send over your suggestions of what we should do next. If you want to see any particular states next, or if you want to go in greater detail about like the applied credit window or having, well, look, I won't make Steve do 500 phases, but maybe we could do multiple phases next time of like 5 or something. Whatever you guys think, please send it over because we love hearing the suggestions and brainstorming ideas on it. So other than that, I think that's it. That's a wrap. So Steve, I mean, thanks for being on with me and going through this. And I mean, he showed me this program, I guess a few weeks ago or whatever, and really getting into the nooks and crannies of incentives with it. And I really enjoyed using it. I was telling him just last week how fast I was moving through tagging with that bulk tagging that he showed you today. So it's really cool, Steve. So you want to close this out? Anything else you want to say about the program?
No, I think that will cover it. Anybody has any thoughts, feel free to email us or call, and we'll be glad to walk you through a tutorial or any help you might need. And so,
great.
Thank you for coming, everybody.
Thanks, guys. Thanks, Steve.
All right, thanks. Bye.